Compound interest is basically interest on interest. Hey everyone, and welcome back to my YouTube channel. I want to do a quick video about where to get started with investing. I get so many questions about this, and although I am not giving any financial advice, I feel like it's important to know where to start. Before we get started, I really have to say the first thing you have to check is if you have any debts, you want to make sure that you make those a priority. Investing isn't about having a get-rich-quick scheme. It is about understanding that it is a long-term investment. But if you still have things in front of you like debt, then I would really suggest that you focus on paying that off first before you start investing. Another thing to note before we get into investing is you need to have your savings there. You don't want to put all your eggs into one basket because you've heard about this stock that's going to do amazingly. No, that is a really, really dangerous game. You want to make sure that you have your savings, so like your emergency fund and your long-term savings ready, and then you have some money for investing. So for example, if you put 20% of your income into savings, maybe potentially you could split it as 15% into savings and 5% into investments, or 10%. It's completely up to you. But two things I'd say is make sure that you pay off any debts that you have, and then make sure that you are saving. Now, step one when it comes to investing is you want to choose the platform that works for you. One of the first platforms is Hargreaves Lansdowne, and then there's Vanguard, and there's Trading 212, and there's Freetrade. If you use these platforms, you have to understand that you will be doing the investing yourself. Unlike using Robo-advisors, when you use these companies, of course, you're investing into your own stocks or index funds or exchange traded funds, ETFs, and things like that. So you will be doing it yourself. So that is something you really want to think about. Do you have the time to be looking at stocks and picking stocks on your own? If you decide to use Trading 212, they're instant orders and it's free and it's unlimited to do so, so there is no charge for it. They have over 2,500 stocks, so if you're looking for a variety, that is a good place to go. And also a great bonus with Trading 212 is there are no ISA fees, so that's individual savings account. There are no ISA fees involved in using that platform. However, the thing you have to know about Trading 212 is that you also have to open up two other different types of accounts. So although you'll get a stocks and shares ISA, you will also have an investment account open for you and a contract for differences account opened. Now, if you're someone that you just want to open up one type of account, then maybe Trading 212 isn't where you want to look, which leads me to my next account. You can also go the Hargreaves Lansdowne way. Personally, I would say that this is for someone who is a bit more of an advanced investor, because every trade costs £11.95. Now, when you're investing long term, hopefully you don't have to make trades often, but if you're someone who decides that you want to put money in every month, you have to think that with Hargreaves Lansdowne it is going to cost you essentially £12 every time you want to put more money in. Now, in comparison to other platforms, it might not cost you as much, or it may be free. The main benefit of using Hargreaves Lansdowne is they have the most stocks. So they have over 8,000 stocks, which gives you such a great variety of places that you can put your money into. So I get that that is where the advantage is. So if you're someone that is looking for quite a range and you want to have access to every stock available, then that is the place to go. So these are the things that you really want to think about. What are you in it for? Is it that you'd like to have a better range of stocks? Are you happy to pay the £12 per trade, or would you prefer to go somewhere else? Another platform I really want to discuss quickly is Freetrade. It's free and unlimited to make instant orders. However, I think they charge £3 a month for their stocks and shares ISA. The basic account is free, and they've recently launched a self-invested personal pension. The great thing about Freetrade is it's quite easy to use. However, there is a certain amount of limited stocks on there, so that is something you want to consider. But I think it is a fantastic place to start. It has great UX UI design, and you can see clearly how your stocks are doing with great simple easy graphs that you can follow. When it comes to Vanguard is also a really, really good platform. However, you can use Vanguard through some of the other platforms that I've mentioned, because I would say Vanguard isn't necessarily as technically advanced as the other platforms that I just mentioned, but it does have the lowest fees. I would say Vanguard is the place to go if you're really trying to keep your costs low. Although I have to say, you can also invest in certain things through Vanguard through other apps. So for example, people have like Vanguard based stocks on Freetrade or Trading 212, so you can choose that way. However, you want to make sure that you are looking at the fees when it comes to what it's costing you a year or potentially what it's costing you a month to run particular accounts. So make sure you have a look into Vanguard as well. If you're someone who doesn't have the time to pick out your stocks, you don't have the time to look at index funds, you don't have the time to look at ETFs, then maybe you want to start looking at robo-advisors. I know we all have a lot on, so robo-advisors might be the way to go. Robo-advisors are automated portfolio managers. After you answer a series of questions about your goals, the robo-advisors will help you choose which account would be best for you so that you know the best ways to make decisions about your money. Moneybox and Nutmeg are examples of two robo-advising investing apps that you can go to that provides ready-made portfolios for you. What's great about robo-advising apps is that you can just continue to contribute money to it and your portfolio is handled for you. So this is for someone who doesn't have the time to be looking at their stocks and be worrying about what the stock market is doing. And most of the time when you put money in that way, it means that it's diversified because they put it into a series of funds, so it's just not in one company, it's in different types of companies, so you can make sure that your investment is well rounded. I would say for many people, robo-advisors is a good way to go and a great way to start. Let's look at key investment terms that you need to know to get started. The first term that I think it's really important that everybody knows and understands is compound interest. So compound interest is basically interest on interest. It's the addition of what you've initially put down based on what's actually grown. So let's say, for example, you put £1,000 into an investment and then it grows by 10%. That means that the compound interest you've gotten is 10%, so it's £100, right? And then what happens, that becomes interest on interest if you choose to keep it within that investment fund. When your investment grows, what you want to make sure you're doing is you're continuing to add that money to what was already there. So that £1,000 becomes £1,100, then it becomes 10% of £1,100 and it continues to grow from there. That is the point of compound interest, and that is the best way to make your money work for you. You want to see it growing. You don't want to be in a space where your money grows and then you take the interest, you take it out and then you spend it and then your money's not really growing, because the whole point is that your money grows over time because you have the patience and discipline to leave it there. Another investment term that's really important is your risk appetite. Everybody needs to understand what level of risk they have, because just because everybody is jumping on something that is really hot right now, it doesn't mean that you should too. Everybody has different tolerances when it comes to risk, so you want to make sure that you understand yours. Another key term everybody should know is stocks or shares. The word is interchangeable, so of course what that means is that you own a fraction of the company. And the last key term that I really want to touch on is dividends. Now it's important to note that not all stocks pay dividends. You might want to do some research on dividend-paying stock because not all companies offer that. But what dividends do is it basically gives you a cut of the profits when you are someone who invests in a dividend-paying stock. Thank you so much for watching this video. Give this video a thumbs up. I hope it was helpful. Make sure you know where to get started. You want to make sure you know, is this something you can do yourself when it comes to investing, or would you prefer to look into a robo-advisor? Choose the choice that works best for you and not on the basis of what everybody else is doing. Don't forget to like, comment and subscribe, and I'll see you next time.